Hello, everyone, and welcome to the Secret Learning webinar titled The Value of Building Better Business Cases. It is my pleasure to introduce our speaker for today, Lisa Hida. Lisa's 20-year experience in the executive leadership spans the business functions of finance, sales, marketing, and product management. Over the last 7 years, Lisa has translated that knowledge into helping Sequent customers across a variety of industries to assess organizational effectiveness, recommend and design curriculum, and help product management leaders achieve their organizational goals. With no further ado, I'd like to welcome you, Lisa. The floor is all yours.
Thanks, Teresa, and good afternoon, everyone. Thanks for joining us in our discussion of business cases. You know, this topic can be so academic and theoretical. So before we get started, let's try a little visualization. When I say business case, I want you to picture this. You've just left corporate America and you've started your own company. You took the best and brightest from your cross-functional team with you. You're the CEO, and you convinced your peers in operations, development, or IT, and sales to join you. You've got several great product ideas, but limited capital from your private equity backers. So which idea do you choose? You're betting, literally, your team's and your personal future on which one you select. That's the context of valuable business cases. They're not an academic exercise. You are not checking the corporate process box, but you're using a tool that can help you and your team make better business decisions, saying yes to the right ideas and no to those that may not be as successful. Teresa, I've got a little delay. Can you give me the next slide, please?
There you go.
Our mission here at Sequent Learning, most of you know who we are. We're a boutique consulting firm based in New York, and we're passionate about the practice of product management. We do work in a wide variety of industry verticals. And something that sets us apart, to be a facilitator here at Sequent, you have to have at least 20 years experience in the job. We're not academics. We have real experience. In fact, I myself have been the junior product manager getting beaten up on almost a daily basis from sales, engineering, and ops, all the way to, in my last corporate life, I led a team of 55 product managers and product marketers in 9 SBUs across the globe. Teresa, next slide, please. Many of you have seen and used some of our resources. So if you haven't done so recently, I encourage you to check out our website. Lots of great tools for you. We've got templates. We've got newsletters and articles for you written by product managers, product management, and, of course, our product management lifecycle model, which we'll be spending some time talking about today. So what are we going to do in our time together? Well, we're going to share some secrets with you that will make a fundamental difference in how your business cases are constructed. We're also going to describe how you can realize the value that can be had by executing successfully. We'll talk about the roles that the bosses can play. And last but not least, how you can transform this from an academic exercise into a powerful tool. So consider this, and it's worth repeating. Again, it's not that business cases are about filling in a template. It's about making better investment decisions. Ideas can come from a variety of great places and people. They can come from customers. They can come from your sales reps or your commercial partners, competitors, and even sometimes the bosses have some great ideas. If you've got 10 ideas and you've got a robust investment process, you might end up with only 1 or 2 being recommended for investment. And that's really key. That's what decision-making is. Resources are not unlimited. You are going to have to say no to some things, and we'll tell you why. But before we go into that, just to make sure we're speaking the same language, here's a definition. So what are we talking about? We're talking about this investment justification document that's a great decision-making tool. And anytime we ask for money, not just for new products and services, but if you're getting into a new market, if you're doing a brand campaign, we want to use this business case format. Why? Because if you don't have a way to filter, then every idea is a good idea. And what will happen is you'll find yourself with too many projects in the pipeline, and none of them are either getting done on time because you're diluting your resources and or not delivering the promised results. We do a lot of benchmarking here at Sequent, and when we come in to do a business case class, we hear about some of the problems our clients encounter. So let's do a quick poll. I'm going to push this survey out, so if you guys would participate in the reasons that you might have issues in creating business cases that are realistic, that would be great. I'll give you just another minute. Results are coming in. Still getting some results. It looks like the majority of you are missing market data, followed by those darn bosses. Execs or other functional champions want their pet projects approved. I'm just going to publish that so all of you can see it. And no one ever goes back and takes a closer look. All right. So let's talk about some of the challenges that we see when we go out and we do our work. Typically, you always come across a financial model or a spreadsheet, and maybe even a fairly comprehensive product description, but not the same level of effort and thought on the market. So it's interesting that a number of you chose missing market data. Just to digress a moment here, this is where our benchmarking tells us that really earn their stripes as being that customer, competitor, and industry expert. So first and foremost, product managers need to help lead their team in that market view. Assumptions, very critical, and typically what we find is they may be missing or they're always focused on the best case scenario. And what do I mean by that? Development will deliver on time, competitors won't do anything, sales comes in for training when they promise, and immediately begin selling. Too often that really isn't the case, which leads to my next point. So if you have poorly constructed assumptions, that's going to lead to forecasts that aren't achievable. Again, what do we see in forecasts? Time zero. Development has finished their work, the product launch takes place, and immediately there's impact. When in reality, the sales cycle might take 12 to 18 months and a lot of marketing investment to realize that first sale. Or maybe the development project plan isn't realistic. There's some R, some research, as well as D involved. Everything has to go perfectly to make the timing. You get the idea. Tunnels versus funnels. If all the business cases are getting funded, as I mentioned earlier, there aren't enough resources and nothing gets done on time. And last but not least, product managers spending time and effort on creating the business case, but their functional team members and or the functional bosses may not agree with the recommendation, and then execution falls apart. So what can we do about that? And the bosses need to help with this. I'll describe a little bit more of that later. So first of all, you need some type of methodology and thought process, and everybody has to use it. There's no special treatment for certain product teams or even the bosses when they want to throw their ideas into the mix. Engage your team so that they feel that they've got some stake in it, some skin in the game for the recommendation. And last but not least, you might be surprised to hear me say this, all business cases are not created equal. If you have a simple product line extension or derivative, you might only need 5 pages of a business case, while a new product category or market entry might require something more complex, maybe as much as 30 pages. Here are the typical sections of the business case. I'm not going to read all of these to you. For more information, you can check out the templates on our website or even Chapter 14 of Stephen's book, The Product Manager's Desk Reference. All the usual suspects that you see in terms of sections for a business case. But I would like to spend some time here. Here are some key tips. As I said before, first and foremost, while you have a standard format, the complexity of your business case can vary based upon the complexity of the decision. In fact, some companies have 2 quote-unquote standard business case formats. And typically the delineation is around the size of the investment. Larger for things like new product categories, new market entry, and something smaller for ongoing product line extensions and derivatives. Now, the more complete your thought process, the more credibility you have with your team and the bosses. Really good stuff. because most companies have some process for allocating funds. And in fact, I bet a number of you right now are in the planning process for next year. And when you're going through that, you're competing with other product teams and maybe even some internal infrastructure investments. So if you can have them spend less time in figuring out your thought process because you're using a standard format, then they're going to spend more time and focus on the recommendation itself and your credibility, which is, again, great for making sure that you shine and your team shines in the decision-making process. Leading right to that last point. And to illustrate that last point, I have to tell you a story. I was working with a client recently, and I was interviewing the executives. We were doing an organizational diagnostic on the process and the progress their product managers had made on the journey in becoming a product-centric organization or product management-centric organization. And, every one of the bosses cited a particular product manager and her team and how this team was always bringing the right recommendations to the table. They really were demonstrating a deeper level of thought process than the other teams were, and they were farther along in their journey. So this process can actually help you demonstrate business and market acumen, team leadership, the ability to drive consensus, really important stuff. Now let's explore this topic of investment funnel, not tunnel, and how business cases can help. Some of you have seen this. It's our life cycle model, and it covers all the work that needs to be done, ideation through exit. My big dark blue boxes are areas of work. The light blue boxes are phases and gates with decision-making checkpoints, those little diamonds. And when we talk about investment funnels, we're talking about these first gates. Now, even if you've got existing products in the marketplace that you're managing, as ideas come for improvements or new derivatives, those should still go back through some type of filtering process. You see my little arrows, and need to go through a standard methodology. So here are some numbers in terms of ratios I want you to think about, and I'll continue to expand and explore what I mean by these words. If I've got 10 ideas that I need to consider for investment, maybe only 4 of those move forward into feasibility, into exploring technical and business feasibility. Maybe only 2 of those 4 actually have requirements written against them, and maybe only 1 gets recommended by the team for development. So think about that tunnel or that funnel concept, 10 to 4 to 2 to 1. And here's why this is important. Again, I'll venture a guess that some of you are living this right now. If you start with 10 ideas and you end with 10 ideas, you don't have enough resources. Resources get diluted, so timelines stretch out. Nothing gets launched on time. Hence our little terminology there, corporate indigestion. So think funnel, not tunnel, and let me show you now how to use the business case as part of creating that funnel. I know there's a lot here. We'll spend some time on this chart. Sometimes our clients will do a full-blown business case for every single idea, 20 pages. And when that happens is you don't have enough time to examine every idea in detail. So you need to start with more of a high-level screening, doing something on one page called the opportunity statement, and capturing key pieces of information like the size of the market opportunity, the product description, the customer need that's being met, a preliminary value proposition and positioning statement. So that allows you to then assess those 10 ideas on their merits, get filtering and get them down to maybe 4, where again, now I'm going to do a little bit more work. I'm going to expand on that opportunity statement and maybe have 5 pages of a preliminary business case so that now I can identify, okay, of those, which ones of those 4, which 2 might have the better chance for business success after looking at the technical and business merits. And then as I go into definition, I'm actually creating my final business case. Now again, if it's a line extension or derivative, maybe my 5-page document expands into 7 pages and that's it. But if it's a fairly complex new product category or new market entry, I might have 20 or 30 pages that go into and get winnowed down into one idea to be recommended for development. Now, our business case doesn't stop there because development can take time. And the last stats that I saw were on average 18 months. 18 months in B2B environments. If market conditions change enough, we may need to revisit the NPV or ROI that we promised, and some of those projects might be killed along the way and taken off, and those monies and resources put towards those things that have a better chance for success. Last but not least, my clients that are really serious about making better investment decisions aren't afraid to look at the results, not as a witch hunt, and not as finger pointing, but as a way to get better at creating the right assumptions and making better business decisions. So let's do another quick poll. This is really interesting. Part of having a funnel means saying no to some ideas as well as yes. So let's see what might be keeping some of you from being able to kill those ideas that don't make sense. So far, the bosses are winning. We've got some bad bosses out there. Yeah, coming down a little bit, but still, the clear winner is the idea came from a high-level executive. No one wants to say no, and it's kind of a neck-and-neck race, but it looks like the first one is the second. Once you've done the work, nobody wants to say it was a bad idea. Let me just publish those so you all can see that. All right. Interesting results. So we're going to talk about that. We're going to talk both about the bosses and about creating a culture that embraces good business decisions. So here's the better practice. Here's the secret sauce. And I'm sure you're not surprised. It's cheaper to kill a bad idea early. The cheapest kill is at the concept phase, really before you spend time and money. So really screening out those ideas early on is key. And, you know who's really good at this? Companies that are focused on innovation, true innovation, not just the words, because they recognize you have to fail about 9 times out of 10 to get it right. So they actually celebrate when they fail because they know then they're one step closer to actually getting to the right answer. And we love this quote from Henry Ford. Again, failure, the only opportunity to begin more intelligently again. So think about it. It might be different than your current corporate culture, and if so, it's the product manager's job to lead the team in not only making the right decisions, but making sure that they feel like when things do have to get taken off the table, that it's for market reasons, not personal reasons. It's not personal failure. There are other things that happen along the way, and it's just good business. So how do we do this? How do we shoot the turkeys early? Well, you have to have some type of screen at each of those gates that I showed you. You'll have one at concept, one at feasibility, one at definition. And these should not be overly complex because if they are, if you've got 20 criteria and you're weighting all of your criteria, then what you're doing is you're actually managing your matrix instead of making the decision. So let's think about concept, that first screening gate. You don't want to have any more than 4 to 5 criteria, and they might be answering questions such as this. Typically, you rate it on a scale of 1 to 10, 10 being the most attractive, 1 being the least attractive. So of the ideas before you, how strategically important are they in the context of the larger organization? How does it fit with portfolio strategy? Does this idea actually add sales of other products and services, so it would be highly attractive, or does it actually cannibalize some existing products and services? Will it provide the right returns? Is it $1 million idea or is it a $100 million idea? Usually there's some threshold of performance that companies will accept and make investments in. How unique is it? How easy will it be to position against existing competitors? And of course, most important, saving the best for last, does it solve a customer problem? Now, one last little tidbit on these screens and prioritization matrices. Companies that do this well have most of the criteria consistent across their product teams. Everybody knows the rules and how decisions are made, so that also helps the teams self-select as they're getting to that executive presentation. We've talked about how using business cases can improve your chances for recommending the right investments and deciding not what to invest in, that funnel versus tunnel. What else do we need? Well, have any of you ever been rallying for a new investment, a new idea that you knew was right, but you just couldn't get buy-in from the organization? I bet some of you have been in that situation. Now think about this. For that idea, did you create the business case, or did the product manager create that business case on their own, or work with their cross-functional team along the way? Let's explore this idea of engaging the cross-functional team. Have any of you read the book The Wisdom of Teams by Katzenbach and Smith? It's been out a while, and today the term teams is almost overused. But when used correctly, teams to a purpose can be very powerful. In fact, knowledgeable and committed team members help create credible and realistic business cases. Now, why would I say this? Well, what's the best way to get buy-in for your ideas? By creating consensus, and that happens by including people in the discussion. So you might just start with a couple of people at the table during concept, maybe the product manager, somebody from development, somebody from the commercial organization, talking about the various opportunities and creating that opportunity statement together and screening them out. And then, as the ideas move forward, you want to engage more of the cross-functional team at the feasibility phase, at the definition phase, so that the entire cross-functional team has this feeling of ownership, and you've thought through as a team not just the development of the product or service, but also the implementation, the execution. And with this feeling of ownership, you get not just team support, but organizational support. So these team members play another key role to get the organizational support, and that is by keeping their bosses informed and involved. So when the team is ready to make a recommendation, the idea has already been well socialized throughout the organization. There's this Japanese term called nemawashi, and I believe the literal translation is the care and feeding of the bonsai. But the business translation is the meeting before the meeting. So by the time you get to the official meeting where the bosses are saying yes to the investment and giving you the money, everybody's in agreement. There are no surprises. Because what happens when the bosses are surprised? Yeah, usually not anything good. They try to be helpful, but more often than not, they don't have the same level of knowledge that we do. Speaking of the bosses, what else do we need? Well, we need a meeting of the bosses on some routine basis to review and approve investments, some type of investment council or portfolio council. And again, let me kind of talk through this slide with an illustration from some client work. A particular client comes to mind when I describe these investment councils. They had the usual problems, too many projects, and the bosses, in this case, were the culprits. While they had a business case template and methodology, they even had large versus small, as I described earlier, the bosses didn't think it applied to them. So different functional executives kept putting their pet projects into development, and guess what? The other projects couldn't get traction. The resources kept getting pulled off. And to make matters worse, the boss's projects weren't delivering the results that the business needed. So the head of product started an investment council, and she made sure those functional executives were in the room with their peers agreeing on the work that needed to be done. So there's something that magic happens, right, when peers commit to one another and agree on the work that has to be done, as opposed to living in a hierarchical view where you're directing the resources. And don't get me wrong, sometimes in the early stages, the CEO had to step in and make sure they stuck with the decisions, but it worked. So think about this. A sales exec, an operations exec, a development exec, a product exec, all at the table, and they needed to meet more than just once a year because market conditions may require changes as you go through the year and change the portfolio, or maybe a project in process isn't going as planned. You want to be proactive. So as we look across our benchmarking, quarterly is about the right cadence. Monthly is a little bit too quick. Annual is usually too slow. And this is a great foundational structure to make sure that business cases aren't just an exercise. There's another really important component of support that this portfolio council plays. Think about your products that are in your portfolios today. And I would imagine they're at different life cycle states, right? You've got some things that are in growth, they're riskier, the future's a little less certain, versus you've got the cash cows, cranking cash, keeping the lights on. not everything gets the same level of investment. In fact, think of your 401k, right? We're all thinking about next year making changes to our 401k, balancing the percentage of risk and return across our personal portfolios. The same idea holds for this portfolio council. By helping the teams understand the resources they have available and what different buckets there are, it helps the teams be more efficient and effective in screening ideas. Let's focus on a key aspect of the business case itself. We've been talking a lot about structures and process. Let's get kind of down into it. We love this quote from Peter Drucker. It's so true. The business case is not about the financial model. It's really about the assumptions behind the model. And if I could have you take just one thing away from our time together, it would be this section, creating good assumptions. So we have our last survey. This one's going to be fun. I'm not going to give you any opinions on this, but I'd be interested in what you guys do for your business cases. More minutes. All right. Ooh, interesting. So many of you actually are creating 3 scenarios. I'm going to publish this, presenting to the recommendation and the next best alternative. Good for you. All right. So let's look at what those different scenarios might be. So assumptions and different assumption sets create these things called scenarios. And typically, they're packaged up as best case, worst case, and most likely. None of us have perfect crystal balls to see the future, but we should be able to craft and communicate the different external and internal conditions that then create these financial outcomes and describe the different levels of risk. This is what helps the product managers and their teams, as well as the bosses, really think about what has to happen to actually achieve both market and business success. This is what creates those forecasts and those pro formas. So what goes into assumptions? Here's a thought starter list. It's not complete, but just to kind of get you thinking about those different scenarios. What are the different industry conditions? Think political environment, economic conditions, technology trends or breakthroughs, timing, hitting a market window, how quickly customers will adopt and accept the new product, will development be on time, etc. If you are new to product management or to business cases, go dig up a past project and its documents, i.e. the business case, if there's one, and find out what they thought would happen and then what really happened. Have a discussion. That's a great place to start with building assumption sets for your next business case. So let's walk through this. This is really important. So this is a generic example. So in a best case scenario here, industry conditions, well, the economy actually recovers. There are good economic conditions. There's no change to the regulatory environment. Confidence is extremely high. As a result, customer acceptance is going to take place within that first sales cycle. They're going to be presented with the new product or service. They're going to recognize its value, and they're going to purchase it. Because we did a good job of managing the project and the quality of the project, we get it out on time, and as a result, we catch the competitors a little bit by surprise, so they don't have the time to respond. So a great best case scenario. Everybody wants to live in that world, right? Now let's talk about most likely. Well, as a matter of fact, what we think is going to happen is we're going to continue to have sluggish economic conditions, but no other significant changes. But because of these continued sluggish economic conditions, budgets at the customer level are still a little tight. So while we may launch a product, what's going to happen is that product's going to get into the budgetary cycle. Customers are going to put it in their budgets for next year. And during the second sales cycle is when we'll actually see the sales of that product or service. Now, in the meantime, because the economic conditions are a little troublesome, and competitors are going to protect their share with deep discounts. So, we'll have some assumptions around average realized pricing that will be very different from our best case scenario. And along with that, we did have some internal issues. Typically, development is 6 months late, so we're going to wrap that into our scenario. And also, we probably will come across some quality issues during the first 6 months. Now, again, you may never show this to the bosses, but these are the ways that you start to think about the different risks of the recommendation. Last but not least, worst case scenario. And again, I'm not going to read this one to you, but you can see that, what are the things that could really happen that would cause you to not be able in a significant way to realize the NPV or ROI that you've got built into the most likely or the best case. So by creating these scenarios, this is the foundation that allows you then to create your forecasts. So assumptions are really important. They drive the numbers. And now you've got to translate that qualitative into the quantitative, typical units, average realized price per unit, rolling up to some revenue number. There's also a cost impact in terms of scale and size. You might also, however, have a qualitative component, particularly if you're going into a new product category or a new market. You'll need to maybe use some types of analogies to forecast what that trend line might be looking like. And you might also have some type of prescribed time frame that you have to adhere to for your investment proposals. 3 years or 5 years is typically what we hear. Sometimes we do have a 10-year time horizon. And all of this will result in some type of income statement, a financial pro forma, which is then the foundation that you're going to go forward with. And you'll want to show business as usual without the new investment. And typically the reason you're considering a new investment is you have some degradation in volume or pricing or market share or an escalation in costs or maybe some combination of all of those. Versus then what would it look like with the team's recommendation. Now, typically you would not want to show best case to the bosses because then they take that number to the bank. What we tend to see is most likely. But I tell you what, if you and the team, even when you look at the worst case scenario, if you're still willing to bet your reputation on that, then it's a pretty fair bet that you would want to move forward with that investment. Before we open up for Q&A, we have one last topic for you. Remember how I mentioned earlier that companies who are focused on innovation celebrate when they fail? So let's talk about that type of an organizational culture. Does this number surprise you? This comes from our organizational diagnostic benchmarking. And I can also tell you anecdotally from being in front of hundreds and hundreds of people every year in the classroom, when we talk about this, the number can be even lower. So this is really interesting because what I want you to think about is this. Embracing good business decisions means you are not afraid to look back at what you've done in the past. So you want to do some type of audit. And this is not a witch hunt. It's not finger pointing, but it's about wanting to get better at crafting that market view, which is then going to result in some type of forecast and forecast accuracy, which is going to lead to better business decisions. So, what went right? What went wrong? What about the timing? What was our market share, gain or loss? These are all foundational questions, and it can really be that simple when you do a business case audit. So the areas to consider and examine look a lot like our assumption list, don't they? With a couple of things added in. Marketing mix impact. How successful were we at establishing the value prop and positioning that we rolled out with, or did that need to change significantly? How did that then relate to the price point that we anticipated? Was it significantly different? How did our operational side go and our execution? Anything and everything is fair game to help you get better, whatever you think is critical. And once you've done one of these audits, you're going to probably find there are 3 or 4 things that really, really matter, and you're going to manage those to a higher degree than some of your other assumptions and considerations. When my clients are really serious about improving their business case performance, they'll actually put in their financial systems a line item for the original business case. Again, not for finger pointing or for witch hunting, but to see and to monitor the progress as the product goes into market so that they can do a better job next time. Wow, I feel like that went by very quickly. So what are some of the key takeaways? Well, first and foremost, creating a funnel and not a tunnel. Being able to say no as well as yes with some pretty robust facts. Having that organizational momentum through engaging your cross-functional team and making sure that the bosses play their part as well. Demonstrating market and business acumen, making sure that our assumption sets are really valid and well articulated. And last but not least, embracing your decisions and having that confidence. So, thank you very much. Teresa is going to help us with some questions and answers. I'm pleased. I think we got some nice time for questions and answers.
Great. Thank you so much. And I would like to remind everyone, if you would like to ask a question, go ahead and select the Q&A tab located above your screen. Our first question for you, Lisa, do you have a suggestion for how to socialize the business case with people who don't seem to be on board as if they have their own agenda?
Yes, absolutely. These can be very matter-of-fact conversations. So let's take a couple of different scenarios. So if you're not able to engage your cross-functional team at the beginning, you might actually have to come up with a straw person proposal. Think, again, about that opportunity statement and just have a conversation with one or two key functional team members to see what their reaction might be, and then you can use that as a springboard to maybe have, a quick lunchtime meeting. Maybe we won't even call it a meeting, but if you tend to feed people, they will come. And just chat about the different options that might be under the table. That would be the way I would start those conversations rolling. Let's face it, everybody is busy, but that would be the way I would approach that.
Great. Thank you very much. Our next question, I have trouble building scenarios. How can I build those?
So think about the different assumption sets, best case, worst case, most likely, a couple of different ideas. Again, go do an audit of a prior project, similar product, similar market, what actually happened versus what they thought they would happen. That will allow you to kind of think through those scenarios. The other way you can do it, we didn't talk about it in this presentation, we talk about it in a workshop, is if you do a sensitivity analysis, and a sensitivity analysis is where you take the variables one by one and you change them by a percentage, raise price 10%, drop price 20%, and find out what crashes your model, and then think through, well, for price to actually end up dropping 20% from what I thought it would be, what are the types of things that would happen to make that become a reality? And you can bake then that into your different scenarios.
Great, thank you. Can you talk more about the funnel versus the tunnel?
Can whoever asked that be more specific? Let's just give them a minute to respond to that.
Sure, and while we wait for them to change their question, I can ask the next question. We all know nobody wants to read a 20-page case. How can I pitch the case in a shorter fashion?
That executive summary, which was the first section on the business case, the sections that I showed you, that executive summary should be a paragraph. And that paragraph should say, what's the product or service, what's the target market, how much is the investment, what's the rate of return, what's the strategic importance. That's it. Keep it short, keep it simple. And you might have to tailor that a little bit depending upon which function you're talking to, what's in it for them, but that would be the way I would approach that. That executive summary really is key. And if it's simple enough for my mother to understand it, then it's simple enough for everybody to kind of get it in the organization.
Great, thank you. What's the best way to get sales data?
Actual sales data or projected sales data? Sorry. For those of you that are on the line, have been in my classes, you know how this goes. It's like feeding the bear. I love to answer questions to make sure I understand correctly. Let's presume it's about sales data history.
I believe it's the projected sales data.
The projected sales data?
Yes.
So you can do this a couple of ways, right? You can do top-down or bottom-up. So if you are in that particular product line, it's an extension or derivative, you've got some historical run rate, right, of how you've been selling for the prior 3 years. And then you can project out the trends continued plus some incremental percentage for the new product or service. That's your bottom-up. Top-down would be, craft a market sizing. What's your total available market? what's the segment that this product or service is targeted to, and what's your projected percent of market share you want to achieve with that product or service. When you compare those two, usually the top down is a little aggressive and the bottom up is a little conservative. So take a blend of the two, and then as a litmus test, ask yourself and the team, okay, what would it take to actually achieve that particular forecast? Are we ready to go back to the funnel versus tunnel?
I'm still waiting to hear back from that person, but we have a couple other questions that have come in here. Could you suggest how to use a business case when we don't really use them in our company?
So the way I would use it is I would be very matter-of-fact with them. If you have, again, let's take several ideas that you need to decide which one do I want to point my resources at, my precious, scarce resources. I would start with, again, a one-pager that would capture, it's our opportunity statement, market sizing, target segment, and have a conversation about the different relative importance of the ideas in front of you. Maybe you've got a quality improvement that needs to happen for a key market segment. But think about the 3 or 4 or 5 key things that the business tends to make the decision on and use those to craft the conversation to be able to make the recommendation. And then step 2, as people get comfortable with your thought process and methodology, you want to include that financial piece, doing some type of forecasting and calculating, a net present value or a return on investment so you can rate and rank those different ideas side by side.
Great, thank you. What are the main points for a good executive summary?
Good executive summary would include, well, number one, what is the thing that you're recommending? Is it an extension, a derivative, a new product category, a new market? So what is it that you're asking for money for? How much money are they, again, NPV or ROI? How quickly will they get their money back, payback period, 1 year, 2 years, 3 years? What is it? What's the financial impact? Again, executives love strategic importance. So if you've got a strategic statement out there at your company about innovation, how does this idea contribute to innovation? If you're strategically focused on cost excellence, how does this idea help you realize the lowest total cost across a platform, as a couple of examples? So there's the strategic piece. And then last but not least, actually the most important, how is this unique versus what else is out there versus other recommendations, and what's the customer impact? That would be more than enough.
Wonderful, thank you. And how do you do sensitivity analysis for business case?
So a sensitivity analysis is again, taking each line item and varying it as a percentage and seeing how your financial pro forma, typically in an Excel spreadsheet, would vary. So if I've got, let's just look at the top line, right? If I've got some unit volume that I've projected out for 3 to 5 years, then I've got an average realized price, which come up to some type of revenue number. So if I take my volume, my unit volume down by 10%, by 20%, by 30%, what then is the flow-through impact to my NPV ROI calculation? Is it material or is it immaterial? Same thing with realized price. You can go higher or lower. But you vary each line item in your pro forma one at a time. And then when you find out which of those things really matter, then you start to ask yourself, okay, have we ever seen, for example, unit volume come in 20% below what we anticipated? Well, why did that happen? What are the types of things? Did a competitor scoop us? Did the value prop not resonate? Did my marketing dollars get cut at launch so nobody had any awareness of the product? That's how you would do a sensitivity analysis, and more importantly, start to think about those different assumption sets that result in those different outcomes.
Great, thank you. And how long after a launch should you wait until you do a post-launch audit?
Oh, great question. It really depends upon the sales cycle. It should be long enough that you should have seen some sales, but with enough time that everybody's still kind of around if you need to take corrective action. So typically what does that mean? what I tend to see anecdotally is somewhere between the 6 to 12-month time period. If, however, you've got, it's a large-scale B2B product that has a 2 to 3 year sales cycle, obviously it's going to be something much, much longer. But 6 to 12 is about right for most business models.
Great, thank you. And can you please tell us about screening using return on sales, IRR, and other financial methods?
Oh, that's a very generic question. Let me answer it this way. So most companies have threshold financial indicators that will either make the cut or won't make the cut when you get in front of the bosses. So return on investment, ROI, NPV, net present value, IRR, internal rate of return. I don't see that as much. And payback, especially in today's environment with the economy the way it is. Payback period. How long does it take me before I make my money back on the development project, tend to be the financial indicators that companies look at most. And, it really varies industry to industry and company to company based upon the strategic intent. Fairly common financial terms. If you're not comfortable with those terms, what I would suggest is, God bless the web, there's a ton of information out there, but also, go take a finance for non-financial managers class, or chat with your financial counterpart or the business analyst on your cross-functional team, or the one that works with your product group, and talk to them about these different indicators and what they see being the ones that make the grade and what doesn't make the grade. So, for example, I've got one client who, as we were having this discussion in, which class was it? It was in our Product Management Essentials class, said, yep, you're exactly right. The bosses aren't approving anything that's got longer than a 2-year payback period. That's the one that really matters. So when you know that, then you can, with your cross-functional team, dial that into your screening process, so you're taking the ideas off the table that you know aren't going to make the cut. Don't waste your time. Don't waste the boss's time. Take them off the table.
Great, thank you. And do you have a business case template?
Mm-hmm. There's one on our website, and also you can find it, again, in Chapter 14 of the Product Manager's Desk Reference. Has a great basics on crafting business cases, some of the things that we've talked about, as well as a template in hard copy format.
Wonderful, thank you. And can you use a business case for new features instead of just new business or new product ideas?
Absolutely, because what you want to see is so think about almost a conjoint analysis. I know that's a pricing study, but really let's think about the parallel here. So, looking at different combinations of features that might be choices that you can roll out in different time periods, and the impact that will have to, an uptick in sales, or maybe it's an improvement so that you've got decreased support costs. Those are absolutely things that are valid to put into business cases. They're just at a different scale and with a slightly different twist on the methodology behind the assumptions. But again, it's all about, what's going to be the financial impact if we choose to do this set of features versus that set of features. And there can be a timing component as well to it.
Great, thank you. One of our viewers has asked, I'm evaluating a new product opportunity for our company. Based on your model, how long should the discovery and innovation phase take? Is there a standard?
There is not a standard, because I'll tell you why. It really depends upon how much expertise the product manager has going in around the market. How well does that product manager know the customer, the competitors, the industry? Because if you're a new product manager, you're going to have some ramp-up time. And I will tell you this, for brand new product managers, that can take as long as six months on average. Then if you need to craft some specific market research during that discovery and innovation phase, that's going to take some time as well. The more complex the decision, the better job you want to do, but there are some high-level things you can do at the outset and then get running. And then as you go along, so at concept, you can do, general discovery in terms of market research. In feasibility, you can do more detailed discovery. And then when you get down to definition, you can do concept testing. So you don't have to do all of it up front, but you have to have at least enough to be able to know the size of the prize in terms of anticipated market share, total addressable market, and the customer segments that you're targeting this product or idea to.
Great, thank you. And to go back to the funnel versus tunnel, is a tunnel just a bunch of ideas and a funnel is just what you select for your action?
Thank you for the clarification. So the tunnel is when every single idea that ever gets thrown at the product manager has to go into development. And that's where we see resources getting diluted and not being as successful, versus the funnel is where the product manager and their team are taking those ideas and they're taking some of them off the table so that fewer ideas go into development than actually come across the product manager's desk. Because I have yet, and God, I hate to say this, but 27 years, I feel so old. In 27 years, I have never seen an R&D organization that's scoped to deal with every single idea that's going to come across the product manager's desk. It's not possible.
Great. Thank you for clarifying. What are the best measures to use to see how well the case achieved its goals?
Well, first and foremost is going to be the financial piece, right? So did I hit my NPV ROI, which, that's going to be determined by, did I hit my volume, which means did I hit my market share projections, and did I hit my price points as well as the cost that we anticipated?
Great. Thank you very much. And when should you engage sales during the development cycle?
Oh, great question. During the development cycle or during the ideation? Did it actually say development?
It did say development, yes.
So this is a tricky question because on the one hand, it's great to have commercial buy-in, because when you've got commercial buy-in, then the rest of the organization has a degree of confidence. On the other hand, if you tell sales too early and it's something that you end up not developing and they pre-sell it, that can create a problem. So it's going to depend upon the relationship you have with your commercial organization. If you have something in your business like a sales council where you have recognized sales leaders that come in and work with the teams on a confidential basis, that's the best scenario that I have seen. But if not, then where you might want to engage them is in feasibility, definitely during definition. But again, the person that you bring in has to absolutely hold in confidence the discussions that are had. And number two, recognize that their role on the team is not just to speak for their territory, but they're speaking for the sales organization. They're vetting your view and helping you with the view of the market.
Great, thank you. And we have time for one more question. That question is there a good way to get market information for a new product idea when there's no market yet?
Again, this is a great question. I'm going to go back to the analogy, and here's the illustration that I'll use. When cell phone handset manufacturers were looking at the changeover from I'm so old to tell this story is, from handsets that didn't have cameras to when they did have cameras, they had no idea how quickly that uptake was going to happen. So they used the analogy of how quickly cameras transitioned from analog to digital, and they were pretty darn close. So if there's an analogy of similar functionality within the market space with a similar customer segment, that's a great thing to do. If a competitor is already out there with a product, you can use that analogy to describe an uptake. Other than that, it's going to be a little bit of doing as much market research as you can. You're going to do conjoint analysis. You're going to do focus groups to actually test your concept and try to quantify the uptake based upon that very, very diligent market research.
Great. Thank you so much. And there is one more question I just want to ask before we close out today. How often should we audit the business case?
Often. So if you do one post-launch, which would be in that 6 to 12-month time period, and your time horizon is 3 to 5 years, if you've got the corporate appetite and the team appetite, it might not be a bad idea for the first 3 years to at least go back on an annual basis and, again, see, how far out were you in your assumption sets, what's changed, so that as you build new business cases, you know which assumptions really matter. And again, you kind of know the realm of forecast accuracy that you're going to get. And so if you're going to do something on a longer-term basis, it would be great if product teams would come together as a sense of community and compare and contrast to see what everybody's collective experience is to provide guidance and insight to future product managers. Wow, those were fabulous questions. Thank you, everybody.
Great. Thank you all so much. And that is all the time we do have for questions today. Lisa, I'll hand it back over to you if you have any closing comments.
I just want to thank everybody for their participation and coming today, as well as those were some very thoughtful questions, and would encourage you to, again, for more on business cases, check out Chapter 14 of the PMGR. We've got some great templates. And of course, we also have our business case workshop, which is a great facilitated work your real-life business situation on the fly in our classroom, and we'd love to help with those problems and with those issues so that product managers and their cross-functional teams can be successful.
Great. Thank you so much, Lisa. And on behalf of Sequent Learning, I would also like to thank everyone for joining us today. We appreciate you taking the time out of your day to come to our presentation, and thank you all for your wonderful questions. At this point, you will see soon on your screen, I have brought up a webinar evaluation. If everyone could just take a moment to fill this out, we appreciate your feedback and use it to improve events like these in the future. Again, thank you all very much for joining us today. We hope you have a great afternoon. This does conclude today's session. You may now disconnect. We look forward to seeing you online next time.